Hello, everyone, and welcome to today's Dynamics 365 Tech Talk. Today's topic is planning and configuring your chart of accounts, Part 4, Calendars and the Ledger. My name is Erin, and I'll be your moderator today. We are broadcasting this session through Teams live events, and the audio can be heard through your device's speakers. This session is being recorded on behalf of the Microsoft Corporation. When you join this event, your name, email address, and phone number may be viewable by other session participants in the attendee list. By joining, you are agreeing to this experience. The recording will be available on the Tech Talks Community Dynamics page within 5 business days. If you have questions for the presenters or need support, please use the Q&A panel located on the right side of your screen. Our presenters will be responding to your questions during the presentation with time at the end. Thank you for your patience during these announcements. Presenting for us today from Microsoft, we have Rachel Profitt, Senior Program Manager, and Eric Pegors, Senior Program Manager. Rachel, over to you to kick us off today.
Thanks, Erin, and thank you everyone for joining us today. I'm super excited for Part 4, where we're going to cover calendars and the ledger. This session, I think, is really kind of pulling together all the configurations that we've talked about in Parts 1 through 3 to get us to that end goal of a fully configured ledger and a fully configured chart of accounts. So again, thank you for joining us. For those of you that don't know me, again, my name is Rachel Profitt. I am a Senior Fast Track Solution Architect based out of Denver. My contact information is here on the screen. I do invite you to follow me on Twitter, connect with me on LinkedIn, check out my new YouTube channel at Dynamics 365 Unboxed, or my website at dynamics365lady.com. Also joining me today is Eric, and I'll let him introduce himself.
Thank you, Rachel. My name is Eric Pegors, and I'm a Senior Fast Track Solution Architect based out of Fargo, and my contact info is on the screen.
Thanks, Eric. So let's get started by taking a quick look at the objectives for today's session. We're going to review the setup and considerations for sharing your calendars. And we're going to be talking about both your fiscal calendar and your ledger calendars today. We're also going to review the configuration that's required for your ledger. So we're going to take a look at all the setup and configuration, how to get that ledger configured, and all of the considerations, sharing, not sharing, all those types of things as a part of that lesson. We're also going to take a look at interunit accounting. So we're going to discuss different scenarios for using interunit accounting and talk through an example, and I'm going to demonstrate for you how interunit accounting works. Some things that we will not be covering in today's session are the details around main accounts, financial dimensions, account structures, and advanced rules. If you missed out on those 3 topics, I do encourage you to check out those recordings of parts 1, 2, and 3, respectively, that are a part of this series. Those recordings are going to be available on the Tech Talk Dynamics community page. I also encourage you to make sure that you do get registered for Part 5. And Part 5 is happening next week. And just so you're aware of what we're going to be covering in Part 5, we have pulled together a whole new series of patterns and anti-patterns all around planning and configuring your chart of accounts, including patterns and anti-patterns around main accounts, financial dimensions, account structures, advanced rules, calendars, and the ledger. So if you haven't already registered for that, make sure you get registered, and we hope to see you here next week. So with that, we're going to go ahead and dive right in with our first agenda topic, which is the fiscal and ledger calendars. I want to start by taking a look at the differences between the fiscal calendar and the ledger calendar. The fiscal calendar is a term we use to refer to the global shared calendar in Dynamics 365 Finance. You can share the same fiscal calendar across all or some of your legal entities. It's important to note that you must create at least one fiscal calendar in your system in order to post financial transactions in Dynamics 365, and that calendar does have to be linked to the ledger. However, There is no limit to the number of calendars you create, although it doesn't make sense to create more calendars than you have legal entities. We do recommend sharing the fiscal calendar when possible to minimize the maintenance across your legal entities. The fiscal calendar is used to define the starting and ending dates for your year and each of the periods within that year. Many organizations create calendars that are based on a calendar year, meaning that they start on January 1st and end on December 31st, and the periods are based on the months within the year. Another way many organizations use their periods are based on the months within a year, but the year starts in the middle of the year. For example, the year starts on April 1st and goes through March 31st of the following year. Yet another way many organizations structure their period is based on a weekly pattern. This is very common in the retail industry, for example, where a straight 4 weekly pattern is used or a 4-4-5 or 4-5-4 weekly pattern is used for each period. This ensures that the period always ends on the same day of the week, such as on a week day or like a weekend day or on a Monday, for example, instead of in the middle of the week or a changing day of the week for each month. When the weekly pattern is used for periods, there are 13 periods in each year instead of 12. The initial definition of the periods comes from the fiscal calendar, but you can divide a period, which is used for the 4-4-5 or 4-5-4 patterns, examples where you have a 4-week period, a 4-week period, and then a 5-week period. It must also, it may also be used in a scenario where your organization is acquired or merges with another organization and an additional close is required. Conversely, when we look at the ledger calendar, this is a legal entity specific copy of the fiscal calendar. The initial definition of the periods come from the fiscal calendar, and you can use it to control the status of each one of your periods. The ledger page has the option to recalculate the ledger periods for each period in the calendar specific to the legal entity if the fiscal year or fiscal periods are changed. The ledger calendar is determined by the value that is selected in the ledger page for each legal entity. When you want to share the fiscal calendar, you simply select the same value for the fiscal calendar in the ledger page for each one of your companies. Switching gears, I want to talk a little bit about the various types of periods that exist in a fiscal and ledger calendar. First, we have the opening period. This period is automatically created by the system for each fiscal year within the calendar. The status of this period is set to permanently closed, which means that transactions cannot be posted directly into this period. This period is critical to the year-end close process when the balances are transferred from the previous year into the new year. Next are the operating periods. The number of operating periods is based on how you structure your periods. This can be monthly or weekly, for example, with periods that are 4 or 5 weeks long. These are the periods where your transactions are going to be posted when you're performing updates throughout the system, like posting journals, invoices, payments, and so on. When you first create a new fiscal calendar or year within that calendar, all the operating period statuses are open, which means that you can post transactions into the periods. You will typically want to put the future periods on hold to prevent accidental posting into the future. You can also control the status in operating periods by module. The last type of period is the closing period. This is another period that is automatically created by the system for each fiscal year within the calendar. By default, the status of this period is set to on hold, and you can manually open the period if you're going to post into this period. However, this type of period is different from an operating period because you cannot post to the period directly from transactions like journals, orders, and so on. Instead, this period can only be posted to by using the closing sheet, which is a special type of journal entry used for year-end close, or by running the year-end close process. And that is an optional setting to create closing transactions. If you don't mark that checkbox, that option for the create closing transactions, when you run that year-end close, then it won't create closing transactions. So I mentioned the various statuses or some of the statuses on the previous slide, but I want to take a closer look at those statuses. So starting with open. Again, open periods are periods that you can actively post a transaction into. This status is not permanent, and you can change the status back and forth between on hold and open as needed. If a period is open, you can put specific modules within that period on hold. Now, when a period is on hold, this means that transactions cannot be posted into the period. As we noted earlier, this status is not permanent, and when the entire period is on hold, the module statuses are ignored. The last status that we have is the option for permanently close. As the name suggests, this is permanent and cannot be undone, even if you open a Microsoft support ticket. You might use this option when a company closes or is no longer in business. If it is legally required by your local government, or if you are past the 7 years required for the US government, for example. Like here in the US, we have like a statute of limitations where we can go back and make adjusting entries and, tax updates and things like that for up to 7 years. Different countries might have different requirements or different, regulations in place that control when or if you should permanently close a period. This option should be used with extreme caution, and security to this feature should be limited to just the trained members of your team. The user is required to confirm this option, and they're warned on screen that this cannot be undone. If they do click on it, there is an opportunity to, click off of it and say, no, you don't want to do this. One of the questions that came up yesterday was whether or not there is a workflow option around this or an approval option around this. And out of the box, we don't have any workflows or approval options around selecting this option or changing the status of your periods. However, if this was something that was important to your organization or you're concerned about this, you could definitely look to use a Power Automate flow, for example, in order to, implement your own business process, approval process, whatever might make sense for your business. But the kind of base out of the box mitigation that we recommend is configuring security and using training to limit this functionality. Now, I want to talk a little bit more about module access. Module access is the term that we use to control the status for a portion of your ledger. It's important to note, though, that the modules that you see in the ledger calendar drop-down box when you're changing the module status do not map to the names of the left navigation modules, or they don't match exactly, I should say, to the left navigation modules of Dynamics 365. For example, accounts receivable and accounts payable are modules on the left navigation, but those relate to customer and vendor in the ledger calendar modules drop-down box. So for example, if you put the module access for customer to on hold, you cannot use menu items in the accounts receivable module to post your transactions. However, if your ledger module is still open, you can use a general journal to create transactions that post to a customer account. Many organizations have period end closes or processes around period end that may last several days or even weeks. It's generally not desired or advisable to leave a period open for days or weeks past the end of the period, as users may inadvertently post transactions into the previous period that actually belong to the current period. And with generally accepted accounting practices, transactions should be recorded in the period where they occurred, or they should be accrued in that period. In many organizations, accounts receivable and sales are closed much quicker than accounts payable and purchase invoices, just as an example. When you use the module access feature, you can prevent or allow transactions in a subledger for all users or a specific group of users. For example, if you want to prevent the customer subledger transactions such as AR free text invoices, sales order invoices, customer payments, and so on, you can stop the customer module but still allow transactions to the vendor. Since the module access is driven by the menu items, you'll want to ensure that your security is configured and tested to ensure that no users can access a menu item in an unexpected module. So next, I want to take a look and do a demonstration for you of how you can control the status of your ledger periods. So we're going to start by navigating into the ledger form, and then I'm going to click on the ledger calendar button. This will open up a new page, and I'm going to select period 2 for my example. I'm going to select the upper checkbox right to select all of the companies, and then click update period status. It sets it to on hold by default, and all I need to do is click update. For the next example, I'm going to switch to period 3. And in this example, I'm just going to highlight a few companies and then click on update module access. Here, I'll select the application module, for my example, customer, and then click select. And then I'll choose the access level. In my case, I want none. I'll hit select. And now you'll be able to see, after I click update, that the customer module column will be changed to none. This indicates that we can't post transactions into the customer module. Really important to note, when you're in that drop-down box, you have those 3 options: none, all, or a specific user group. The list of user groups that you see in that list are based on what you have configured in the user groups page, which is found under system administration. And when you create a user group, you can simply just create the name of the user group, and then you go to another tab where you select users, and you use like a left and right arrow to move those back and forth to the selected pane. So with that, I am going to hand it over to Eric, who is going to talk to us about the ledger. Eric, over to you.
Thank you, Rachel. Once you have defined those prerequisites, you are ready to configure the ledger. So let's take a closer look. Next slide, please. The ledger is a special page in Dynamics 365 Finance that is used to control and configure the parameters for how the general ledger will function in each legal entity. It includes settings such as the chart of accounts, the account structures, currencies, and calendar that should be used in the selected legal entity. You can think of the ledger and the as the finance architectural blueprint for your legal entity. You can have the same settings in the ledger across legal entities, and this is how we quote unquote share the chart of accounts, account structures, calendars across companies. The terms legal entity and company are used interchangeably in Dynamics 365 Finance. Each instance of Dynamics 365 can have many legal entities. By default, when you install Dynamics 365, you are provided a default company that is called DAT or DAT. This company should not be used for creating and posting transactions. However, you may consider migrating your default configurations into this company in order to use the copy company feature in the data management workspace. When you are planning and creating your legal entities in Dynamics 365, it is important to note that we strongly recommend that the legal entities you configure in the system should match your organization's legal structure. In larger organizations, you are likely to have additional companies that are not used for transactions and only used for consolidations and eliminations. There are special flags on the legal entity page that control if the company will be used for these types of transactions and prevent regular transactions from posting and only allow the consolidation or to only allow the consolidation and eliminations process. When we think about sharing versus not sharing your chart of accounts, there are several considerations and configurations that you will want to consider. First is the ledger. Like we discussed earlier, the ledger is always legal entity specific. In order to post transactions to the general ledger in any company, the ledger must be configured. You can use the same settings in many legal entities to share values such as the chart of accounts, account structures, and calendars. It is also critical to note that many settings in the ledger cannot be changed after transactions have been posted. For this reason, it is critical to carefully consider the settings prior to posting any transactions. If a change is required to the chart of accounts or currencies after transactions are posted, you will need to create a new legal entity and configure the ledger with the new settings. We recommend that you share the calendar across legal entities whenever possible. Remember that the ledger calendar is the legal entity specific version of the calendar that allows you to control the status of the calendar per legal entity and module, as Rachel just demonstrated. We also recommend that you share the chart of accounts whenever possible. The chart of accounts is the list of main accounts that will be used when posting transactions. And remember that you can manage exceptions on the main accounts using legal entity overrides. You can also use additional consolidation accounts to meet statutory requirements or consolidated reporting requirements. The account structures can also be shared across legal entities, and we recommend that you share the account structures when possible. You do have the ability to change the account structures after transactions exist by going into draft mode and then activating when you want the new changes to take effect. Keep in mind that the dimensions or segments that you put in the account structure can have legal entity overrides to help manage the exceptions. You can also use advanced rules on your account structures to make segments and combinations that are legal entity specific.
Got a little click happy there earlier. Sorry about that. But now it's time for our finance joke of the day. Don't be a toddler. Share your stuff. Hopefully you like our terrible finance jokes. This isn't our best work, but if you liked it, interact with us. Tell us you liked it. Give us a thumbs up. You can use that Windows icon on your keyboard and the period key together to open up the emoji selector in Teams. Moving on. Back to you, Eric.
Yes, thank you. When you configure the ledger, One of the key settings that you will need to decide on are the currencies. The first field for currencies is called the accounting currency. This is the quote-unquote primary currency of your ledger, and is typically the local currency of the legal entity. All transactions in the general ledger and subledger are recorded in the accounting currency. You will see columns in the inquiry screens for vouchers and transactions called accounting currency, which is the currency that you select for the legal entity in the accounting currency field. The next field is the reporting currency. This is an alternative currency that is used for financial reporting. And a lot of times this will be used for the currency of the parent company. If it's a British company, then the reporting currency would be British pounds, for example. This currency can be left blank if a second currency is not needed. You can set the reporting currency to the same value as the accounting currency as well. However, it is important to note that you cannot change or add a reporting currency after transactions exist. And we had a little talk about this yesterday in the chat, and it's kind of personal preference to you can either set the reporting currency to the accounting currency or leave it blank if you don't need it. And I think we agreed that it was personal preference, but most people thought that leaving it blank rather than duplicating the accounting currency would probably be the right thing to do. And I did want to mention that in it's been a couple of years. I think it was in version 8.1. The calculation for the reporting currency amount was actually changed. So it's been this way for quite some time, but in AX 2012, especially in the earlier versions of finance and operations, it worked differently. Now the reporting currency is calculated directly off of the transaction currency, which we'll talk about in a second. Previously, the transaction currency would be converted to the transaction currency would be converted to the accounting currency, and the accounting currency would be converted to the reporting currency. And currently, it goes straight from transaction currency to reporting currency with one conversion. So it is truly exactly the same pattern as the accounting currency. When you create transactions throughout the system in Dynamics 365, including actuals posting to the ledger and budget transactions as well, you can select any currency for the transaction, and the system will automatically convert the amount to the accounting and reporting currencies in the ledger using the exchange rates that you defined. The default exchange rate types are configured in the ledger as well, and that is the transaction currency. After transactions exist, it is critical to note that you can never change the ledger currencies. Never is underlined, and it's red, and it's in all caps. Don't open a support case. It will not be changed. If a change to these currencies are required, you will need to create a new legal entity and switch to that one with the new settings. And now we're going to have a video or a demo of the configuring the ledger. And because, like we said, most of the settings, all the interesting settings cannot be changed, the first thing that this demo does is create a new legal entity. And this is the TechTalk demo legal entity, or TTD. So we'll create this legal entity. And then we're gonna set up a couple more things on this legal entity, and then we have to refresh the browser to get the new legal entity to show up in the legal entity list. So that'll take just a second here while we create a fresh legal entity and with an uninitialized ledger. So the ledger will be all blank when we log into the TechTalk demo company here in 1 second. Okay, here we go. We're into the TechTalk demo company, and we're going to open up the ledger form or ledger page. And you'll see right away that everything is blank. So we're going to go into edit mode, and we're going to select the chart of accounts. And again, we're selecting the one that's used in other legal entities. So this is sharing. Same for the fiscal calendar. The fiscal calendar Fiscal is used in a lot of the demo companies. We're not going to do anything with balancing financial dimensions. And we set the accounting currency to USD, and we're going to set the reporting currency to British pounds, which is the example that I mentioned, where this is this legal entity is in the US, but the parent company is in Great Britain is a potential reason for choosing those options. We're setting the default exchange rate types for accounting, reporting, and budgeting. And now we're going to add the account structures. And again, we're sharing these with other legal entities. So this is the balance sheet. And what it says on those messages is that when you add an account structure, the combinations have to be adjusted or synced to that new structure, which is that's normal. And there's no transactions in this company yet, so it won't be a problem, or it won't take any time. So we've chosen the third one, including which is the statistical accounts, the third account structure. And now we're going to recalculate the ledger periods, which will go very fast because, again, there's no transactions. But since we changed the calendar, we should do that. That'll sync all of in another scenario, that'll sync all of the general ledger to the new fiscal calendar. And next, we're going to talk about interunit accounting. So back to you, Rachel.
Thanks, Eric. So interunit accounting is our next topic. It's a fun one for Friday, I think. So let's dive right in. In some organizations, there may be a need to keep a balance sheet by a dimension and not just the main account. This is the concept that we refer to as interunit accounting. When you use this functionality, it allows you to select one of your financial dimensions to be used to balance all transactions and produce a balance sheet by that dimension. When you post transactions, the debits and credits for the dimension that you've selected must be equal. And if they're not, the system is automatically going to create an adjusting entry to balance the dimension using your interunit debit and credit amounts that you specify in the accounts for automatic transactions form. These accounts are your due from and due to accounts for balancing that interunit dimension, very similar to how you use your due from and due to accounts for intercompany accounting. It's also worth noting that there are two versions of this functionality that vary slightly in behavior. One that exists on the ledger form, which is the one that I'm talking about and the one that you're going to see a demonstration of today, and another with fields directly on the financial dimension form. We did talk about that briefly in our part 2 when we dived into financial dimensions. So the fields on the financial dimension form, if you choose to use those, require that you configure a posting definition to define the ledger accounts that should be used for balancing the voucher. And a slightly more manual process is required to create the entries to do that balancing. This option or version of balancing dimensions is typically used by public sector organizations. Now, another difference to note with the posting definitions is that when you use this option, you aren't limited to one interunit debit and credit field, because with posting definitions, you define kind of, you define like a from and a to mapping, so to speak. And you could potentially have multiple inter-unit debit and credit fields. So if you wanted to separate your inter-unit main accounts, you could do that. Now, when you want to use inter-unit accounting with the ledger, the version that I'm going to demonstrate for you today, it is critical to note that the dimension you select in the ledger form must be included in all of your account structures, and it cannot allow blanks. If this condition is not met, you'll actually receive an error message when you select that dimension in the ledger form, and you'll need to remove the value from the balancing dimension field and correct the account structures before you can select that particular dimension. So with that, what I want to do is switch over and do a quick demonstration of this functionality. So I'm going to start with all of the setup. We're going to go into the ledger form, and I'm going to go ahead and go into the edit mode. I'm going to select a dimension, and you're going to notice that I get an error message here when I click on save. This is because my account structures do not all have business unit in them with allow blanks removed. So I'm going to open up my manufacturing balance sheet. I'm going to go into edit mode because this is active right now. And you can see that the business unit segment allows blank. So I'm going to clear that. And then I will reactivate this account structure. I'll close this window down and I'll go back to the ledger form. I'll repeat this process for the P&L. I'll go into edit mode, select my business unit segment, and clear the blank values are allowed. And I'll need to reactivate. So after I activate this, I will close the window down and we'll go into statistical. Now my statistical technically already does not allow blanks. I do click edit on this, but I have nothing to actually change. So I either need to delete the draft or reactivate it, since it doesn't matter either way how you do it here because I didn't actually make any changes. So I'm reactivating that and clicking activate, but I technically could have also clicked on delete draft. So now that all three of the account structures that are in here have the business unit and they don't allow blanks, I can reselect that value. I get a message here letting me know that all of my entries are going to be balanced. And now I need to configure my inter-unit debit and credit fields. So we're going to close the ledger form and we're going to navigate into the accounts for automatic transactions page, which is found in the general ledger underneath posting setup. Once I'm in that accounts for automatic transactions screen, this is where I can see those inter-unit debit and credit fields. Mine were already configured, so I didn't need to specify anything. So now what I want to do in my next demo is walk through and show you how to create, what this looks like in action. So I'm going to make a journal entry in a general journal, and I'm going to make sure that I have different business units on my offset account. So I'm creating a new journal. I'm going to select the journal name for the general journal, and then I'm going to click on lines to open up the journal. Once I'm in the lines, I'm going to go ahead and put the details in here. For my example, I'm going to go over into the account field, and I'm going to select my miscellaneous expense account. I'm going to select values for all of these dimensions. I'm just selecting allowed values. I don't have any retail channels that are allowed with this particular cost center. So I'm going to skip to business unit. For this example, I'm going to select home 001. I'll select all the other dimensions. So I'm choosing a department, an item group, and a customer. And then I'll put in a debit amount for this example. So I'm going to do $1,000 here. And on my next line for the offsetting entry, I'm going to use the same main account, and I'm going to use all the same dimensions. The only thing I'm going to change on this is the business unit. So this time I'm going to select auto 002, same department, item group, and customer. and I'll put in a credit amount here for 1,000. So now I've got a balanced voucher. I'm going to go ahead and save and post this voucher. Obviously, you can have lots of entries. This can happen as well if you've got, other types of source document transactions where your voucher doesn't balance. When I'm done, I'm going to click on print and then choose poster transactions by journal. And you'll notice I did select both the financial dimensions and ledger account checkboxes. And then I just click OK to generate this report. And this will pull up a report where you can see the vouchers. Now, you can see the system automatically generated this entry for me in my due from and due to accounts, balancing out that business unit for me. So you can see those debits and credits that were created. All right. So with that, I'm going to hand it over to Eric, who is going to walk through our do's and don'ts for the ledger. Eric, over to you.
Thank you, Rachel. So let's talk about some do's and don'ts for the ledger. And these are somewhat of a repeat, but these are the most important things. So we want to make sure that they are super clear. Do's. Do analyze and select the correct accounting and reporting currencies. That cannot be changed, as we mentioned before. Do also analyze and select the correct chart of accounts, which also cannot be changed. Do make your legal entity structure match your legal structure. And this is important to not have too many or too few legal entities because you end up compensating with either having a dimension or have reporting problems because the data that you want on one report is in two companies. So again, that's really important. And then the last do is use Interunit Accounting, a balancing dimension, for when you need a balance sheet at a lower level. The don'ts are don't create support tickets to change the accounting or reporting currency or the chart of accounts. Those go with the first two do's to make sure you do the right analysis ahead of time. Don't make more or less legal entities than you have legal companies. And if you make less legal entities, don't use a dimension to represent a legal entity. And I'm going to hand it back to Rachel for the rest, but then I will have a Q&A, a couple of Q&As to start off the Q&A session.
Awesome. Thank you, Eric. So we're going to wrap up today with our checklist and resources. It's the same checklist and resources that we've pulled together for you for the rest of the series. And these will be available for download with the recordings of these sessions in the TechTalk Community Dynamics page. So you can go download all of these links and use this as your guide. Really, most of what we talked about today was in the second page of our checklist. And at this point in parts 1 through 4, we've now gone through all of that configuration that you need. There's a few optional things that we didn't cover, like we didn't demonstrate or talk about ledger account aliases as an example, but there's a link there if you want to set those up. It is an optional feature. We encourage you to use this checklist as a guide to help you when setting up and configuring your chart of accounts. Now, one thing that I want to emphasize today, and I know we've talked about this, but it's really important that you create a financial architectural blueprint for your implementation. One of the things that we don't recommend is that you just take your chart of accounts as it exists today and bring it forward and then try to match all of your configuration to match your chart. You should really be designing a chart that's designed to work with Dynamics 365 Finance and all of the functionality that we have. I think you'll find in the long run, if you redesign your chart to match the functionality of Dynamics 365 Finance, you'll wind up with less long-term maintenance pains. It'll be easier to report. And if you follow all of the guidance and best practices that we've put out here, I think you'll find that you'll have a better solution. If you do have those statutory or specific reporting requirements to be in certain formats, I will strongly encourage you to use the ledger, additional consolidation accounts and the consolidation groups together to create that kind of mapping or transformation of your chart of accounts to those statutory requirements. But when you create a good blueprint of your financial business processes and you design your chart to that, right? The chart of accounts and all of this ledger setup that we've talked about is the backbone of all of these downstream processes and things that are going to happen throughout the system. And having a good design here will affect everything else that you're doing downstream. So I can't emphasize enough, don't just copy your chart of accounts. I don't know, Eric, if you have anything you want to add to that.
No, I think you handled it well.
Thanks. So the last slide here is just those resources to get you out to the general ledger docs and the finance learning e-learning catalog. We do encourage you to use these resources to help you in your learning journey if you're just getting started with the general ledger and the chart of accounts. So with that, we're going to switch over to our Q&A session, and it does look like we have a couple of questions that are still open in the queue that we'll work through, and we might go back and revisit some of the questions that we've already answered in the Q&A panel.
Yeah, I have a couple that I want to mention, and then I want to. If you could take a look at the reclassify question, Rachel, while I'm, one of the questions we had was, is it possible to turn off the balancing or the inter-unit balanced financial dimension? And the answer to that is yes. You can go into this is one thing that you can change in the ledger. As the demo that Rachel showed, she added it. It can be added after the fact, and it gives you the warning that, things that have been previously posted are not going to be balanced. And in the same pattern, you can go in and remove it, and it'll give you a message that will say that, the things that have been previously posted are not going to be unbalanced and nothing else will be balanced, but it will let you do it. And you do that in the ledger. That is the balance or the inter-unit dimension is one thing that you can change. Yeah, it's called balancing financial dimension. Is one thing that you can change after transactions have been posted, and it just gives you a warning that it's not going to be retroactive or anything like that to change. The other question that I was going to mention was, about they said that they did have two companies. One has a April to March calendar, and the other has a January to December calendar. And as long as those companies actually have those dates, then you can create a fiscal calendar for each of them. The fiscal calendar is what defines what actual date is the beginning of the fiscal year and the end, and how the periods are defined. So all the calendar stuff, all the numbers, as far as if they're 4 weeks long or a month long or whatever. And this is not sharing, but if each of those legal entities that's how they operate, then not sharing is the right thing to do in this case.
Yeah, and just to add to that, keep in mind that you'll have to, if you want to stop those periods and put them on hold, you can't multi-select, right, the companies. So you'll have to go into each ledger calendar specifically to be able to select all the companies. So I was multi-selecting companies. Because you have two separate fiscal calendars, you'll have to go through that process twice, once for each company or once for each fiscal calendar that you have.
Yeah, I think if you looked at that, right, if we looked more closely at that page, the top control is the fiscal calendar, so you can only see legal entities that use the same fiscal calendar, but you can switch it and do them independently.
Yeah. All right. So this question about reclassifying. So the question is, if we classify For example, current to non-current, the ledger balance originated from the subledger, for example, the bank, via the closing sheet. What is the implication? Does it create a reconciliation issue with the bank versus the GL? If yes, what are the available options to reclassify the balances in an appropriate way? It depends a little bit on what you mean by reclassify. So if you're actually moving a balance from one main account to another main account, so if you have like a current year and a prior year balances, this is really common with like fixed asset depreciation accounts. You're like, and we'll go back to the bank example here. The bank is linked to a main account, and the out of the box reconciliation reports for your subledger to ledger reconciliation are looking at the main account. So if you do move it out of that main account, you would cause a reconciliation issue with that out of the box report. If you're just reclassifying like dimensions, then your subledger to ledger reconciliation won't be affected, because subledgers don't store financial dimensions. They're only part of the ledger. And we talked quite a bit about that in part 2. If you do have this situation where you're moving it from one main account to another main account entirely, then you're going to likely need to either customize the existing reconciliation report or create your own mechanism for reconciling that is actually summing two main accounts, or using date ranges and things like that. You might have to run 2 reports. But, from the ledger to subledger reconciliation reports that exist in each of the modules, they're designed to go look at the parameter that is on that bank account or on that fixed asset or on that customer posting profile or vendor posting profile, whatever, wherever that GL account, that main account comes from. So hopefully that explains it. If not, feel free to kind of type back in another question and we'll try to get that addressed. So someone asked, can I have a reporting currency in one legal entity in blank in another? And yes, you absolutely can. There's no restriction on kind of like across legal entities. So those ledger settings are per legal entity. You can even have, if one legal entity has a reporting currency of, say US dollars, and another company has a reporting currency of Canadian dollars, and another one has a reporting currency of, British pounds, like that's supported as well. We look at those independently. Obviously, the one thing you would want to really consider here is if you are consolidating, just think about what your consolidation company accounting and reporting currencies look like. And, think through, what currency revaluation looks like if you are doing a consolidation. That would be my only kind of piece of advice there.
Rachel, there's a question about, can we create a closing period during December in the subsidiary entity for better control? And I believe that the answer is you can't sort of create one-off fiscal or periods of any kind. You have your periods, and there's a closing period on the last day of the year and an opening period on the first day of the year, and the closing period is only accessible through the closing sheet or the year-end close. But I was wondering if you have anything else to add on that.
I'm not sure that I'm following. Can you repeat that?
Sure. The question is, can we create a closing period during December in the subsidiary entity and it's the reason they're asking is for better control. And I believe that this is like a special closing period they want to maybe manually create, which is generally not supported, right? You can create the normal, you can only, there's an opening period on the first day of a year, all the regular operating periods, and then the closing period on the last day of the year, which is only accessible with a closing sheet or the year-end close process.
Right. Yes. Okay. So I understand now. I think you're right. Like the only type of period that you can manually create is a operating period. The closing and openings are created automatically, and there's not a way to manage that. So if you have this situation, the one thing that I might recommend is that you make a special journal name and a special voucher series that's used for these closing entries, and link it to the journal, like, link that voucher series to a special journal name. You might want to set that up to be private for specific user groups as well. So it's limited to a small subset of people. And then from a reporting standpoint, right, if you've got a separate journal name and a special kind of voucher series for these closing entries that you're doing, you would be able to kind of pull those out from a reporting standpoint. That would be my best kind of, recommendation from a workaround standpoint without trying to edit the system or customize the system.
Okay, one last question here. When we pay a customer invoice and the dimensions are different on the invoice and payment, the system generates transactions to balance the dimensions. Even though the balancing dimension in the ledger is not configured, is it possible to turn that off? And I think that the answer to this is no, because it's trying to sort of make up for the differences between the invoice and the payment during settlement. But I was wondering, Rachel, if you have any comments on this general question.
Yeah, I mean, you're right. The answer is no. There's not a way to turn this off. It's because it's creating settlements. I guess if you want to air quote turn it off, don't settle your transactions. But then I would ask the question, like, have we designed your dimensions in a way and designed your account structure in a way that doesn't make sense? Because that settlement is typically a balance sheet entry. So you might have a financial dimension on those balance sheet accounts that doesn't make sense, but it's getting filled in because, it's coming from source document headers or something like that. So in most cases, I agree it doesn't make sense. Like but I would go back and look at, like, have you designed something in the chart or in your account structures that's putting a dimension on these main accounts where that settlement is happening, to cause that to happen. But I mean, it is natural behavior, and there is not a way to turn it off unless either don't settle or don't use those dimensions on the main accounts where the settlement gets posted, which are typically balance sheet accounts. And in most cases, you don't have dimensions on a balance sheet unless you're doing interunit accounting. So
perfect. That's
hopefully that answers the question.
I think that's great. Yep. And that was what the part that I was not sure on. So and there's no other questions. So
great. Were there any other questions that came in that got answered that you want to revisit or reemphasize?
There was the last question was about whether permanently closing a period is checking any of the other periods before you close it. And I believe that changing the status of any period is independent, and it's just that one period, and it's your decision, and there's no real cross-checking other than, like you said, you get at least one confirmation if you chose permanently close.
Yep. So you're absolutely correct. It does not check. We even had someone go into one of our demo environments and close a random March or something like that. Permanently close it. I don't know if they were just trying to see what it looked like when it happened. I'm like, yeah, well, thanks guys. March is out for demo data.
That's it. Thank you.
All right. Well, awesome. Thank you again, everyone, for joining. Make sure you are registered for part 5 happening next week. We've got 3 GIFs that we have pulled together for you. It's going to be amazing and exciting with all these patterns and anti-patterns. I can't wait, but I'm going to hand it over to Erin. We do appreciate your feedback. Please take a minute or two to fill out the survey.
Excellent. Thank you, Rachel. Yes, I have posted a link to a short survey in the Q&A panel. We'd like to get your feedback on today's session and hear what you'd like to see in future events. We thank you in advance for your participation. As a reminder, the recording of today's session will be available on the Tech Talks Community Dynamics page within 5 business days. I'd like to extend a big thank you to Rachel and Eric today, and of course, to our audience for joining us. We hope you have a wonderful rest of your day wherever you may be.